Paul Tudor Jones is a well-respected trader with an estimated fortune of a cool $7.5 billion. Now, he's most well known for being able to predict and profit from Black Monday, the event in 1987 where the stock market suddenly dropped over 20% in just one day. Now, recently he sat down with CNBC to discuss everything going on in the world of macro and investing. And so in this video, we'll be looking at the three biggest takeaways, including whether he thinks more rate hikes are coming, or is the Fed now done? His predictions for where he thinks the stock market will be 6 to 12 months from now, even if there is a recession. And then we'll finish up with Bitcoin. During the boom, he became a big fan of Bitcoin. So what happened? Did he sell? Has he hodled? Or did he buy the dip? Okay, so first up, unless you've been living under a rock, you will have noticed these ever-increasing interest rates. So what is Paul Tudor Jones's prediction? Are the rate hikes now over, or are there more on the way?
I'm so glad I don't have his job, because listening to these guys try to not say what they really want to say and what they really think.
What do you think he really wants to say?
Oh, he wants to say we're done, we've gone too far, and enough's enough. That's what he wants to say. He just can't say that because he's new on the board and he has to follow the chairman. But that's what he wants to say.
And what do you want to say? If you
I think he's right. I think they're done.
You think they are done?
Definitely, I think they're done. I mean, they could probably declare victory now, because if you look at CPI, it's been declining 12 straight months. 12 straight months. That's never happened before in history. So there's a strong downward arc to inflation at the moment. Two-year break-evens are under 2%. Clearly, they have to be governed by trailing 12-month inflation. But if we get to the here and now, you can see that inflation, to a great extent, has been wrung out of the market. Now, does that mean that we're getting ready to imminently cut? No. But you got to think of interest rates a bit like chemo. So chemotherapy, chemo is poison. Interest rates, with the kind of amount of sector-wide debt that we have between private consumer and the government, we're probably at levels where we've typically hit a recession in the past because of the interest tax on the economy. So we're at a level that historically has really slowed the economy and historically has kicked off a recession. I think it's just a question of waiting for that tax on the economy to work its way through.
Next up, we dig into the macro situation, and there is a lot going on. We have this debt ceiling issue bubbling over, which could cause a stock market crash. We have this impending recession looming, but the question is, well, what happens to asset prices? Well, here is Paul Tudor Jones's prediction for what's coming our way.
I think that's what this debt ceiling is going to be. It's going to be kabuki theater, a little throw up. And the real question is, where are we going to be a month from now? A month from now, after it's resolved, stocks are probably a little higher, gold's probably a little lower, rates might be a touch higher, because those risk premiums will disappear. So that's the very shortest term. Our financial cycle, the peak of total debt growth plus stock market valuation, occurred in September of 2021. Historically, it's about a 2-year lag when that really, really bites and you go into recession. That would be third quarter this year.
Okay.
Actually,
so
going into
a recession, but you think then the stock market's higher because it's looking at 12 months after?
Because I think, again, if I just think about this year, and I think about 06, 07, 08, it doesn't mean that the stock market cannot go higher as the economy decelerates. If you just think about it, if that was the last hike that we just had, the playbook's real simple. 6 months from now, stocks are 10% higher. 6 months from now, interest rates are generally 50 to 70 basis points lower. There's a halcyon period post last hike where asset prices do okay. Commodities barely recover. The dollar kind of does nothing.
And so, amazingly, with everything going on, Paul's playbook remains bullish. Okay, and to finish up, during the last bull market in crypto, there were some big names who jumped on board. We had Ray Dalio, we had Elon Musk, and Paul Tudor Jones. So the question is, where is he at today? Being a well-known trader, did he sell, did he hodl, or did he buy the dip?
Bitcoin. You came on our air during the early part of the pandemic. I think it was trading at $8,000-9,000 a coin. And you said, I'm in. And I think you wrote it all the way up to 60 some odd $1,000. And we then wrote it back down to $15,000, and we're now sitting, I think, somewhere around $27,000.
I've never sat on a horse that long. Just so you know.
So what's the? You're still on the horse though.
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification of my portfolio. What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I look at it in gold, and I think they've done so well recently because of the fact that we have had these great risk premiums. I wonder whether they may not be boring in the future. Also, Bitcoin has a real problem because in the United States, you have the entire regulatory apparatus against it. So it's just kind of yesterday's news. And if inflation's truly done a bit, if that story's been played, then you have to wonder, we were buying gold and Bitcoin for the inflation hedges. That game may be over. I would, in 6 months ago, before AI, before the possible productivity boost that we'll get for it, I would have said a completely different story with regard to the inflationary future and with regard to all the inflation hedges.
Paul Tudor Jones is a well-known billionaire investor trader, and here is his latest thinking. He believes the Fed is done raising rates. He thinks that the debt ceiling is just theatre, it will get increased, and what's more important is where we're at a month from now. He says Q3 the US will probably go into recession. However, he thinks that the stock market 12 months from now will be higher, not lower, and will likely see some rate cuts. And because Bitcoin is the one thing they cannot print, he has held throughout the boom and crash and never plans to sell. So there you are, guys. Hope you enjoyed. Now tell me, what was your biggest takeaway from Paul Tudor Jones? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.